good? All right, it's another day, another dollar, another session. Tested, back tested, whatever. I know my screen look a little different, so when I was back testing the week over the weekend, I decided I'm gonna start leaving my sessions up. That way, it gives me a reference point to kind of go back, and I go straight to my session and see like, okay, what happened. It gives me the option to back test my sessions, and then it lets me look at it as a whole to see like how price has moved recently through my sessions. So that just ignore that. This one is the session for today that we're focusing on, but we got to go through the high time frame. So higher time frame, what we see is price broke here. This one broke here, pushed all the way down. So on the 1 hour, we have impulse to the downside. Prices started the retracement. So we wouldn't be surprised to see it continue pushing up during our session. So let me go to the 1 hour. And also let me go ahead and bar replay back to 7 a.m. when I first got to the market. Okay, so the one thing I noticed is let me find 15-minute structure on this 1 hour time frame and see what's going on. So the last high we had was here. Price pulled back and then shot down, basically sharing a low with the 1 hour. So price finally broke here, where we see it pushed here, immediately pulled back and pushed all the way up to this one. So first we want to come here. We see the pullback started right here. We want to make sure, boom, no break, that's clean. So we have 15-minute high already established, and we see this is where the pullback started before it broke, and this was the lowest point it got to. So we already have 15-minute high. So looking at this, what we see is price impulsed, started a retracement, but it's playing around the top. So while ideally with market structure, I want to see a retracement, price doesn't exactly have to do that. Similar to this one where price have, or similar to the original break where price broke, retraced barely, didn't even get to the retrace down here or any of these zones down here. It just kind of played around the top and then impulsed again. So we can see it going either way. Ideally, I would want to see a retrace, but we're going to go off the lower time frame market structure. So we know we got the impulse. We know we're in a retrace. So let's just go to the 10-minute and see what's going on here. So when I go to the 10-minute time frame, let's kind of see what we notice off gate. So first thing I notice going to the 10-minute is boom, push. Now the difference is they don't share the same high. So when it pushed, this was the 10-minute high. So when we look, we say, okay, did it break anywhere? So when it tested, let me just draw the 10-minute line. So when we look at here, there was no break. But when we look here, there was a break, meaning this was the new high right here. And there was no other breaks after that. And this is actually the 10-minute low. Now, so what we need to do is draw our nice little zone from here to here. Go ahead, give it some nice little color to it. And then pull our fib out. Pull our fib out. We know we want it within the 50% range at minimum. So before I just go straight to 50, what I'm going to do is look. Is there any open zones anywhere within this area that fall also within the 50? So we already see that it's testing within the 50. So we can drag it straight to the 50 and be comfortable with that. But we want to make sure there's no open zones we're missing. So boom, there was no open zone there. No open zone there. There's a small open zone here, but it already filled it. So nothing open enough to where we need to pull it to that. So we could just pull it straight to the 50, right? And at the 50, it aligns with this one last candle. So we like that. We're going to leave it there. And now let's identify what phase of the market 10-minute is going through. So the 10-minute has impulsed. So impulse from this low, broke this high. So that's where the impulse ended. It hasn't broke the high anymore. So, and it just started a retrace. So it retraced, it's back to our zone, testing our zone. So we could get in this trade with 10-minute confirmation, or we can go to the 5-minute and see how the 5-minute structure aligns. And there might be a 5-minute opportunity within that 10-minute opportunity. So we're going to look to analyze this area, or really just the overall market structure of the 5-minute in this entire area, to see how it aligns with the 10-minute. So we see all of this here. It looks a little jumbled. So again, what we do, we go back to the clearest point. So we can go back to the same point as the 10-minute. So price pushed here, right? Pulled back and then broke here. So this is the low, which was never broken. It was wicked past but never closed. So never broken. And then we have a high, same as the 10-minute. What happened? So when we draw our little 5-minute one on, we draw the 5-minute, what do we see? The same situation as the 10-minute. So price didn't break here, but then it came here, broke. So it shares a high with the 10-minute. So we'll get rid of this and understand that the 10-minute and 5-minute share the same high. And then it never broke at any point past it. So that means the 10-minute demand can also apply for the 5-minute. However, we have to analyze it the same way we did the 10. So we draw our fib on. We understand that price is in the 50 on the 10-minute. But now we're going to go through and look for open zones on the 5-minute that might need to be tested. So here, no open zones. When it pulled back to here, there is a small open zone. Well, there's an open zone from here to here. It was slightly filled, but not fully filled. Fully filled would have been it touching this area, which it didn't. So it slightly filled it, not fully. So I'm going to make this the 5-minute. So if price, as we see, price is in the 10-minute. So if it gives me a 10-minute confirmation off the 10-minute without testing the 5, I will get in. However, if it touches the 5, then I can get in off 5-minute confirmation. So it's just a matter of whichever one presents the best opportunity first. Bada bing, bada boom. So we know we're in the 10-minute right now. So this is the 10-minute. This is the time frame we're going to follow to start. So let's go. What we get? We got this big push there. And this is the time I got to the market. I did get here a little late, so I did kind of miss this. But let's see. This isn't one of the trades I took, but let's see what would have happened. So put the stop loss a little, entry a little bit ahead. I would have just done this candle because there's so much impulse. It's really like a Maribozu. 14, 15, that would be 30.5. All right, and let's see what that next candle is. Boom, so we in this move. What I want to do is identify the 75% mark. So I'm looking for 30.5 pips. So 23, if we round up, is technically the perfect. 23, so 35. And I'll call this my partial. It's not really a partial, it's just an indicator. So I don't like letting winning trades turn into losers. Anything closed past 75% is considered a winner. So sometimes price will get close to TP, play around, and the next thing you know, you're taking a very small profit, or you're so angry and think the price is going to get back to your TP, you just let it run into a loser. No, once it closes this area, I'm a lot more strict when I see reversals or very bearish candles again, or candles in general against my position. Once it crosses the 75% mark, I'm more likely to close if I start seeing things that make me a little less confident that it's going to make it to TP and might be reversing. Because, hey, once it crosses this line, I'm a winner. Regardless if I get the full 1 to 2 or if I get 1.75, 1.8, 1.9, I will. If I close the trade past 75% of profit, I am comfortable and confident in that move. So we are here now. So we're managing this trade on the 5-minute, which shares the same high as this one. So we did get put into this one. Again, this is a trade that I didn't end up taking because I came to the market a little later than I typically do. So this is actually kind of an extra a trade. Maybe if I'd have got here a little on time or a little early, that I would have been able to take advantage of. So let's see how this one would have played out. Bam. Okay. So not to the 75% point, but what we do see is the 5 minute was broken. So technically 5 minute struck. So we gotta go through and kind of redo everything. So what we see is price gave us a nice push here. We are deep in profit. So what that means, this 10 minute has a new high. We're just gonna sit it here for the time being, as we draw everything. So what do we know? We know that price had a low here. So we know price pushed here, pulled back to here, and then kept pushing. So we know our 10 minute is from here to here at a minimum. Is there any open zones? There is an open zone right here, right? There's an open zone right there. But this is that makes my thing so small that it's kind of uncomfortable being that small, because then it really doesn't give me room for 5 minute. So what I'll do is I'll put it at the top of this impulse candle where we entered. That way, if there's something on 5 minute, sorry about that. That way, if it's something on 5 minute, I can take advantage of it. But I'm still aware that there is this little gap right here that might be filled. So now I want to go to the 5 minute, because the 5 minute has the same structure. So price had a high. See, now I can't even remember. Let me go back. Price was here, broke. Okay, yeah. Price had a high here. Same as 10 minute, low here. Now I just need to go to 5 minute to see. So I see there's a gap here to here on the 5 minute. So what I'll do is I'll just draw the 5 minute between that whole gap. Especially because it's a little structure, internal structure right here where price pushed, given a kind of chalk type of style. So I like the 5 minute there. This is not considered a retest. You got to remember, until price broke right here, all of this is still one structure. So this is all one impulse, even though it looks like it retraced and stuff. Internally, it retraced and tested, but overall, it actually is just one big impulse. Now, the situation that I am in here is that I have no way to protect myself. Unless, I mean, I could draw this on as an area, but I'm in profit. So let's go to the 2 minute. If there's something better on the 2 minute, we'll take that. There really isn't anything better on the 2 minute, so we might as well stick to the 5 minute, because the stop loss is going to be in this same area anyway. So what we want to do is just draw this internal structure on. So now I know where I'm managing my trade from. So we got some nice profit. We're going to see how far it crosses, right? So managing it from the 5. So let's see what the next candle is. Immediately push down. So that establishes our high. It's pushing into our 5 minute. So if we get a break, we're out. It's that simple. So what I would do though is I would manage it from the 2 minute though, because the 2 minute and 5 minute were the same. It might, 5 minute might break, and now I have to wait the full 5 minutes to exit for it to close, and it might go ahead and hit my stop loss. Where in this trade, I'm just looking at the 2 minute candle, which is going to happen a lot faster. So let's see what we get here. Boom. Hold on. Well, we don't enter our 5 minute internal, so we're not even looking and considering getting in on that. Because I was thinking about that at first. So I was like, hold on. If this was a 5 minute, we could have got in. Nah, that does not apply to internal structure. Okay, so let's go to the 2 minute. We know it didn't break anything, but did it give us any internal structure we can move? Yes, it did, because price went here, boom, and then went here. So this gives me an opportunity to move my stop loss a little more. Now, the one thing to remember, yes, we only enter trades off a true structure. But when we managing trades, again, my focus with managing my trade is to protect myself and protect my capital. So I don't care if it's internal structure. I don't care if it's external structure, regular structure. When I'm managing my trade, wherever there is structure, that's where I'm managing my trade from. Because if I manage this trade from a full trade perspective, the reality is I wouldn't even be getting out till down here, or I would just be taking a full loss. Versus I'm utilizing the internal structure that's been formed to help me protect my trade. Because I'd rather get stopped out early and be able to have the opportunity to get back in a trade than to take a full loss when I was in profit and there was areas that I could have used to help me exit a trade early, cut my loss early. So we're gonna keep watching it from the 2 minute. It broke, it closed past it. We take a small loss here. We go ahead and exit with a small loss. And look, we had a 14 pip stop loss and got stopped out at 5. So we only lost about 1/3 of whatever we were risking. So to put that into perspective, if you were risking $100 on this trade, you would have only lost 30. If you were risking $1,000 on this trade, you would have only lost 300, which means I, in a sense, saved myself 70% of the capital that I had at risk by just managing my trade the right way. So what we're gonna do, we're gonna come back, erase this. Again, we don't enter trades on the 2 minute at all. That's something that I'm gonna back test, and if it works, if it's high probability, if it is something I can find comfort in, that might become a new part of my edge. If not, we'll just continue to manage trades there. So now we're back. We look at the true structure again. We can get rid of this partial. So far we got one more trade left. We took our first trade for the day. Oh, and the funny thing is the first trade I took was actually this one. So I got in and kind of got stopped out around the same area. So if I'd have got here on time or a little earlier, I would have been able to catch like this move off the 10 minute. I'd have been able to catch this move off the 10 minute. I'd have just hopped straight in. Because I got there late, I was able to take this move on the 5 minute because it came, tested the zone, gave a confirmation, pushed past it. So we got a nice little push, but we would have took more of a loss here. Well, I took more of a loss here because my stop loss was actually right under this versus where that 10 minute stop loss was like all the way down here. So we took more of a loss there. So now we're just looking to see. We see that 10 minute structure has not been broken. It's still push, retrace. So we're looking for a continuation off of this zone. It's tested it once, pushed a little bit, and then came back down. So in my head, I'm already like, let's just see how it pushes the second time. Because we don't assume that because it rejects the high one time, it's going to reverse. We need to stay within market structure, stay following our trading plan. So 10 minutes, good. 5 minute, we're waiting to see. So let's get a couple candles. We got a buy there. So, and the reason I can enter this is because what? Price came, tested the 5 minute. So now because it tested the 5 minute, I can get in on 5 minute confirmation instead of the 10 minute confirmation. So we got a high here. We're going to put our entry like right there. And we pull it all the way down this time. And the reason I'm doing that is because price has shown consistently that it's solidifying this low. It rejected here, internal structure, rejected here, internal structure, rejected here. So if it's going to push up and if it's a safe area, I would call this a safe area. It's safe to say if price gets here and breaks through, like, okay, we're done with that trade. So 11.5, which means 12.5. So we're looking for 25.5. I'm going to fix it if we get entered into the trade. So let's see the next candle. Nope. We got a bearish candle. So now we got to wait for a whole nother confirmation candle if this is something that we do want to enter. So no. Boom. Nice push to the downside. We're going to check the 10 minute. We haven't got no confirmations here, but now it's deep in the 5 minute. So now I'm just focused on 5 minute opportunity if it makes itself available. So boom. Next thing you know, we get us a bullish confirmation candle. Looking to enter right above it. Similar. I'm taking the bottom of it. 14.5. That is 15.5, which is 31.5. So we're going to see if we get entered. So we don't get entered immediately, but the next candle is also a bullish candle. So I have two options. I can either adjust my trade so that my stop loss is smaller and my target profit is smaller, or I can leave it where it is. So for me in real time, I left it where it was. The reason I did that is because for me to get entered into this trade up here, price has to break through the moving average essentially. Which again, I'm being more aware of the moving average. It's not something I will enter a trade on, but when the moving average aligns with my zones, it definitely gives me a higher probability chance. So seeing that there's a moving average here, if I was to look to get in here, I could get spiked in, price encounters this moving average and immediately rejects. If I wait, then price has to break the moving average to enter me into the trade, just giving me a high probability that price will go my direction. So rather than adjust this, I just left it the way it was. And I said, let's see what the next candle does. So let's see what it does. Are we in this trade? Bang. We are into this trade. Price is pushing, broke through the moving average. It didn't close above it. So that one gives me like a little skepticism. But at the same time, let's go down and see if there's anywhere to manage it. So true 2-minute structure. So true 2-minute was right here. So true 2-minute structure is actually downtrending. So I have to draw it just so I'm aware. Where's the gap? Boom. There was a gap here. It just got filled. Once it got filled, yep, there's a gap here that has not been filled. So I'm going to draw it from here to the high, which this was the highest points. This was the low. This was the high. And then this low got broken. So this is the high still. And now this is the low on the 2-minute. And I'm not going to, well, might as well do it for the video. Just use my templates. My 2-minute, 2-minute, 2-minute. But again, you got to remember. So technically, there's nowhere to manage this trade because my 2-minute is downtrending. So there's nothing I can do to protect myself. Unless, like I said before, using that internal structure. Yes, the 2-minute is truly downtrending, but the 2-minute is also formed some internal uptrending structure where I can protect myself in this trade. Versus saying, oh, there's nowhere to protect myself, so if price pushes down, I'm going to take this full loss. No, I could say, hey, look at this internal structure right here. Boom, 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 boom. It's not the cleanest, it ain't the greatest, but it's something that allows me to protect my investment. That's all risk management is about in the market. You feel me? What can I do to protect myself? Because if I'm going to lose, if this is a losing trade, my whole thought process is, if this trade is a losing trade, there's nothing I can do to avoid taking the loss. But there are things I can do to reduce how much I do lose on this trade. And that's where my management strategy is all about. That's why anytime, even if there's no real structure to manage, I will go through internal structure and manage my trade with internal structure, because at the end of the day, it's not about, it's a game of preservation. How long can I keep myself in the game? And especially if you're doing high risk trades, like, you want to be protecting yourself because you want to avoid a full loss. Yeah, I accept that at most I'm going to lose. Let's say I'm risking 500 on this trade. I accept that at most I'm going to lose 500. But if the market gives me hints where I can exit for a loss of 250, right, instead of 500, of 300 instead of 5, even 400 instead of 500, I want to take that, because even saving just that $100 in capital, that $20 in capital, that $50 in capital by cutting a loss early, that could be the difference in a blown account and an account that you have another day and another opportunity to trade in. So always look to protect yourself. It may not be exactly how I manage my trades, but everybody, you'll find something of your own. Things will start to stick out to you that help you manage your trade. But let's go back to our 5 minutes. So we got in on the 5, which means we're managing it on the 2-minute. And this is actually the second trade I did take. So things are on par now. Let's see. So price formed the high. Boom. It's stuck there. Okay, it pushed off, but it didn't break the internal structure high. So technically the internal structure high for the 2-minute is right here, We need to see it break this so we can get a new high, or we're going to see it break to the downside and we're going to get exited out of the trade. So let's go. Boom. It immediately broke, closed on the 5 minute. So I know it broke and closed on the 2 minute. Again, another situation. I may have only saved myself a tiny bit of profit, right? Because look, technically I would have been out already by that candle. I would have exited the minute this candle closed, and that's actually what I did. I would have only saved myself a little bit. We're at 14.5 and I exited at 13.5. So I didn't save myself a whole lot, but again, even saving myself a little bit of capital on my losses each day will help me in the long run. If I save $20 on every single loss, so let's say I'm risking 500, but I close at 480 for the next 5 losses. That's $100 extra in capital that I saved myself because I had a system in place that doesn't allow me to avoid losses, but it allows me to control losses. And that's the big difference. So I took a loss here too. That's my 2 small losses for the day. I mean, again, yes, I had an idea in my mind and in my head that, okay, price, like I said, in the very beginning of this video, I said price can do one of two things. Price can keep pushing or it can pull down. Now, at the end of the day, we don't know what the market's going to do no matter what it looks like. All we're doing is making educated guesses. Now, based on market structure, even if I had a strong feeling price was going to the downside, my analysis tells me, hey, there's a high chance price is going to go up. And it gave me confirmations to enter trades that it might be going up. It just so happened that today it didn't go my way. So I'm okay with the losses I took. And I also controlled the losses I took as well. I didn't take a full loss in either one of these trades. So even though the second one was much closer to full, I didn't take a full loss in either one of these trades. Both of these trades were early exits, regardless of how much more or less I did save on it. So that's the big thing. I mean, that's all. Like, there's no secret key, secret ingredient. Like, it's all about just showing up, being disciplined. I showed up. I was disciplined. Let's see where the market is now. I wouldn't be surprised if the market has already broken, like I said. So after I got exited out the second trade, I kind of already knew the part that market wasn't going my direction. That confirmed it. The thing is, I only take 2 trades a day. So when I take my 2 shots, you feel me? That's my 2 shots for the day. But I still get the opportunity to look at the market and say, okay, I see what's doing different now. Okay, I see it's doing things different. I had my first shot here. Had my first shot here with the market where I got in. Market stopped me out. Had my second shot here where the market gave me confirmation. Didn't work. So now, even if I was a trader who took multiple trades, I wouldn't have took another trade in the upward direction, even if I had a confirmation, because I already took 2 trades on the upward direction, and the market basically said F me. So I would have been looking for a break, which actually makes sense. Like, it makes sense that it broke because prices do a retracement to the 15-minute. But market structure didn't align with that, so I went with the lower time frame market structure to get my entry. So, hey, that's what it is. That's what it was. We're done for the day. So no matter what it does, I'm done. But it never hurts to just kind of look and keep myself open to the idea of whatever's going on in the market. So I'm done for the day. I'm not going to sit around and watch because, hey, I don't have any trades left to take. That's going to do nothing. That's nothing but a teaser or asking for you to break your rules and do something. When you're done for the day and you're still sitting around looking at the charts. So for me, I'm done. I got my back testing session in. I'm going to show up tomorrow, trade again, do my back testing session again. And hey, we're going to see what tomorrow holds. And we're just going to continue to get better, continue to grow. Again, there's no way to avoid losses in trading, but you can master how to manage losses in trading. So hopefully this was helpful. Hey, until tomorrow.